Hello traders, Gary Wagner here. Approximately 3 o'clock in Honolulu, 8 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is January the 8th, 2021, and this is the daily report for gold and silver, our weekend review. And what a week we have seen. Chaos in Washington, announcements today by President-elect Biden that we will be spending trillions upon trillions of dollars immediately following his inauguration. He will announce the budget on Thursday, and we have a lot in store. The thing that is most perplexing is that with the environment that we have, we saw gold and silver sell off so dramatically. The only explanation I have is it leaves me dazed and confused. Let's take a look at current pricing. Traders, this is yet another week that will be a large footnote in the history books when we look back to 2020 and 2021. This week was mired by multiple events, one of which was militia and so-called protesters crashing through both the House and the Senate and taking over the chambers, statements made by President Trump alienating even his own constituents, and then today the dramatic, massive sell-off in the precious metals markets. We have gold currently at $1,849.90, down $63.70, about a 3.3% in terms of today's correction. And what is most interesting or noteworthy is when we enlarge this one chart here, you can see that the low, not the close, but the low actually went into the 200-day territory. That's the first occurrence of it this year because this is December here. We definitively closed below the 50-day moving average, and we opened above the 100 and closed below that also. This is certainly a day when not all of the events added together, I believe, justify the kind of carnage that we saw in the precious metals. We were stopped out of all of our trades. We pulled small profits on all of those. We'll go through those as we pull up our charts. When we look at spot gold, down to $1847.80. Silver had a massive hit, almost 6.5%, $25.50. Of course, SLV closed lower by about 7%, $23.51. GLD closed lower by about 3.5% at $173.34. And the dollar index was modestly higher, about 0.3%. And about the only thing, and it does look top heavy, by the way, was Bitcoin. Now, this is Bitcoin futures, but as you can see, up $910 at $40,000 per coin. Let's go ahead and try to make sense out of what happened in the market today and talk about where we believe we could see gold and silver pricing heading over the next few weeks. Traders, call me foolish, but the magnitude of today's sell-off in both gold and silver, I think, is a over-exaggeration, at least for the reasons cited for the sell-off, and that being higher yield in bonds and a tendency to move money into the risk-on asset class. Simply put, even those two events make no sense when we compare that to the other chaos that's going on in Washington, and most importantly, the fact that on January 20th, we will have a new president, and he announced today that he will be spending trillions in additional dollars. He will come out with a full budget statement on Thursday. That is a definite day to mark on our calendar. But traders, really, on a day like today, I think the best thing I can offer is a little bit of clarity, and that is in regards to the technicals and whether or not we sustain major chart damage and where we can look to go from here. What is most noteworthy, we talked about the fact that over the last couple of days, we had a pretty decent level of support coming in at the 100-day moving average. That came in at 18.99. The market opened well above that, as you can see here, but during the trading session, it broke through the 100-day, then it broke through the 50-day, and actually traded into the 200-day moving average. This is the first occasion in which we have seen gold trade at or under the 200-day moving average since the end of December. And that is well over a month ago. That's quite some time. This is a tremendous move lower. The only really saving grace in terms of a technical indicator for a potential rebound is the closing price of the day. Even with this brisk and brutal sell-off, taking the market to an intraday low of 1827 and breaking below the 200-day moving average, first, it did recover and move back above it. And secondly, and I believe most importantly, the close came in just above $1,847.40, and that is the 38.2 Fibonacci retracement level from the data set we've been using, 1450 to 2088. On a short-term basis, it's important to see whether or not this holds, because that will determine my next set of parameters as to where I think it could go. On the surface, we do have some support that comes in at 1825. That is a fairly easy thing to see because it's simply from the series of lows that occurred here. Call it second and third week of December. And then, of course, the level below that is 1771, and that is the 50% retracement. And traders, we need to continue to address whether or not we saw major chart damage in today's downside move. And to do that, I have created a short-term Fibonacci retracement of this leg of the rally. It begins at 1766 up to 1962. And here's what I find is interesting. Take a look at the 61.8% retracement. Typically, that's as deep of a retracement as you will get. And as you can see, although it closed above it at 1849, it did trade below it. So, again, this is yet another key level that we want to watch as trading begins tomorrow, whether or not 1841 will hold. Because if it does, it is an excellent buying opportunity. If it doesn't, it could also be an excellent buying opportunity. Good buy home, good buy car. We could see the market trade lower, and my level that I would look at would be the 78% retracement level at 1809. If you recall from earlier this week, I was pretty amazed that we came within 40 cents of being stopped out, and in my commentary and market forecast, I said I feel good, at least for now. And what I meant by that was that there was a distinct possibility that we could see further downside pressure, and in fact we did. But the net result is we bought at 1890, we covered at 1902.20, we made $1,220 per Comex contract. In terms of our Forex trade, we entered at $1,886. We were stopped out at $898. And then the differential comes out to approximately $12 per ounce. Depending on your position size, will determine how much profit you made. Traders, as far as our long March silver position, we entered at 26.31. Our stop was hit at 26.41 for a 10-cent gain times 5,000 ounces. The contract size at the Comex means that you made a profit of $500 per contract. On our GLD ETF, we went in at 177.26, out at 178. So we made a profit of 71 cents per share. And traders, finally, on our SLV position, we got in at 24.67 and out at $25, and therefore made a profit of 33 cents per share. A crazy week, to say the least. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update. and review. Bye-bye.